Hello, traders. Gary Wagner with the Silver Forecast here. It is Tuesday, the 22nd day of March, approximately 10 o'clock here in Honolulu, Hawaii, 10:30, and this is the Daily Report. Currently, we do have silver trading higher this morning, currently at 36.36. It's putting it up anywhere between 28 and 32 cents higher. We are looking at a Henkin chart, which is a Japanese average chart. The time parameter on this is 162 minutes. If we have time sometime, I will explain why I come up with these odd incremental numbers, but I will tell you that they are Fibonacci based. And so that 1.62, 1.61, that is a very important Fibonacci number. That is the reason that I do use it. What we are noticing on this, just in terms of course, the shorter term trend, and let me get my arrow up here, is that over the last Henkin bars, you can see that we have actually gotten that absence of our lower tail. For those of you who follow myself and my report, as well as are knowledgeable in the Henkin chart, the one thing that you do look for is this absence of tail. That tells you that there is still good strength in the trend. Of course, the second thing that you look for is the relative body size of the Henkin candle itself. And so that when you get these large bodies, such as you've gotten right in here, you're really getting a trend that is accelerating. As that body size begins to shrink, as we see in these boxes up here near the top, it tells you that the trend is beginning to weaken and possibly turn around. Of course, what we wait for is that change in color. We got that during this last correction, that is, of course, right here, but it does appear, at least tentative, that we are back on a upward track. This is our daily candlestick chart, and as you can see quite clearly, we do have a gap, and the gap at some point will come back and get filled. That's typically what a technician looks at, and that's right in here. We'll want to pay close attention to that because those gaps become important later on. But what I'm noticing more than anything really is the absolute strength that we're seeing as this market propels itself back up. And my belief, of course, is that it will go test and take out this 31-year high that we saw last week. Of course, one of my favorite charts to view in the silver market has been just simply a daily bar chart in which we put our Andrews pitchfork. Now, the reason that I like this Andrews pitchfork so much, as you can see, is that it will A, move with the trend, and will create a nice set of channel lines for us based on, of course, 3 contact points, an absolute low, and the low that I've picked is well before when the rally starts, and then this low and then this high, which will always correspond, I have found, to the actual Elliott wave count of 5 here, then A, 5, then A, B, and then C, and then your final C wave down will give you the bottom of that particular Andrews pitchfork. Now, as I talked about briefly yesterday, it's not a tremendous stretch to actually look for our first level of resistance to come when and if, and I believe when, but I have to say when and if, this market begins to trade along the upper edges of this Andrews pitchfork. Now, just as we saw last week, it was able to exceed it. But if you take a very close look, what you're going to find is that when the market did go above that. Let me blow that up for us just a little bit and bring that in so that I can illustrate this point a little bit better. But what you can see is that after the market comes up, you can see it closes right at the high here. It comes up and goes well beyond that Andrews Pitchfork upper channel line. But the following day, you have a lower high, and then the following day, you have a lower high. Again, you get some lower highs, clips up, and then, of course, the market moves down, finds contact and support with this lower channel line, meaning the handle of this Andrews Pitchfork. And for our last chart of the day, it is the Henkin chart, daily and Andrews Pitchfork. And one thing, we talked about the data points that I use. You can see that as the market was very, very lackluster, I have used the data point at the low or right before that market takes off. So that's data point 1, data point 2, and data point 3. But the reason for bringing this particular chart up is to take a look at these daily Henkin candles. And as you can quite clearly see, we got our first indication. We talked about this, of course, on Friday, that I felt that the correction was in fact over. And then we have had 2 real solid days in terms of gains, no lower wicks, nice body size in comparison to the others. It absolutely appears on a technical basis that silver's uptrend is fully intact. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another Silver Forecasts Daily Review. Bye-bye.